Welcome everybody to another episode of the Black Wealth Renaissance Podcast. Your boy David Bella, 1/4 of the Black Wealth Renaissance. Checking out my co-hosts, fellas. How y'all feeling?
What up, what up, what up? It's your boy Jalen, man. Feeling great. It's a Wednesday. We at it and we going hard, man. Can't wait to get this one started.
Man, what?
What's good? What's good? It's your boy Jared checking in, man. I just got off work not long ago, man. I'm just chilling today, man. Just good old hump day, trying to get to the weekend. You know, us 9-to-5ers.
Hey, man, but look.
Man, we got another Louisiana native.
Yeah.
A brother from the boot who doing some crazy things, man. Right down the street from here, from Lake Charles, Louisiana. We talking none other than our boy, Chris Senegal, doing his damn thing out of H-Town, man. First, he done bought the block. Yeah. Then he let y'all buy the block with him, man. Like, I can't even – it's just so much that my brother is out here doing. Hey, like this is long overdue. So, Chris, welcome to the podcast, my brother.
Appreciate it, man. I'm glad to be here.
Chris, we glad you could come to the show, man. The way we normally kick this thing off, for everybody who is unfamiliar with you, could you tell them who is Chris Senegal and how you ended up buying the block and helping people buy it with you?
Yeah, let me try to keep that short. All right, so Chris Senegal, like I said, born in Lake Charles, lived 9 years in Port Arthur too, so I kind of claim both. But I was a teenage dad. You know, I was kicked out of middle school for selling alcohol, so I had a lot of reasons to, you know, make excuses, but I didn't. Went to college on full academic scholarship for civil engineering. Got out, got that good corporate job, got that, you know, corporate salary, got that house. And went to work every day and realized I hated it, man. I was like, I sold the dream. So I was a civil engineer working for the railroad at that. A lot of people like those railroad jobs, but, you know, it's good money. But, you know, you still under the control of somebody else. Somebody else dictates everything about your life. So for me, it's like I got to figure out how I'm going to get out. So I started with options trading in 2008, kind of similar market to where it was right now. You know, so some money was being made for a little while, then it got too crazy and money started going out the window. So I hit reset and I started reading books and real estate kept coming up. So I made my decision to focus on real estate in 2008. I was in Memphis, Tennessee. I quit that job, moved back to Houston, be back closer to my son and my mom. And I started flipping houses in 2008, man. So I kept my corporate job till 2015, but the whole time I was just steadily building. In 2013, I had the first opportunity to do something bigger because I had rental properties. I had houses I was flipping and selling, but I just felt like it was something bigger that could be done because like I was watching everybody else doing the same thing. And I was like, man, nobody's really tackling any of these bigger issues in our community. And as a matter of fact, a lot of us that are buying rental properties and renovating them and increasing the rents or buying a house in the hood and flipping it and then selling it, we actually accelerating gentrification. Because the people that usually buy, the people that move in aren't the people that were originally there. So for me, my focus became, how can I create a solution where it could be a win-win for everybody? And so, yeah, 2013, I had the opportunity to own or finance an entire block. So that means go buy a whole block without using a bank. The owner had inherited it from his dad, and he was bad off, like a slumlord and just tired landlord. And I negotiated a deal with him to pay him $450,000 for the property, but on payment terms. So I gave him 10% down and took over the property. This was in Fifth Ward in Houston. The hood, they was calling it the Bloody Nickel, you know. But I saw the potential in it because from that property is right on one of the main freeways. I could see downtown. I was like, eventually it's gonna be worth something. Mm-hmm. So yeah, that's how the journey started, man. From there, you know, I guess we'll get in more detail about everything else. But yeah, that's how it started. And
man,
we're pushing.
Bro, that story is great. I didn't even know that you had got kicked out of school. Then you went back to school. I knew you went to school for like academics and stuff.
It's a crazy
but I didn't know that you had got kicked out and stuff. So that's
man, you know what? I was like the smartest kid in the class, but also the class clown at the same time, you know. And I always just felt like I was bored, you know what I mean? So this is kind of confirmation now that I just wasn't cut to do the regular stuff, you know.
You wasn't being challenged enough too sometimes.
Right.
Like, sometimes that's what it is. Like, yeah, we can do the school stuff, but that's boring after a while. Like, I can understand this. You probably, obviously you're an engineer, so probably more hands-on, more technical and stuff. Probably a little bit more advanced than everybody, man. But that's dope that you was able, even though, I said that to say this, that even though you met adversity, you still found a way to overcome it, and you
Right.
still found a way to say, okay, I'm still gonna make it in the school, and I'm gonna make it on an academic scholarship. So that was really great, my brother. And also with the options trading, that part kind of stuck out to me too, because like you said, it's very similar to right now, and that's kind of like some eerie feelings to me, man.
Yeah, it's one of those things where a lot of money can be made, but a lot of money can also be lost. Now, I will say this. I've been watching some of the new guys that are teaching options trading now, and they have gotten more sophisticated with it, and there's more technology than there was in 2008. So it may be a safer bet now. But, I mean, you meet a lot of people that are multimillionaires in many industries, but you don't meet a whole lot of people that retire from trading. There's a small group. So I don't knock everybody that's doing it. And I guess if you're following somebody that's teaching you the right ropes, then it's possible that it could be a lifelong income earner for you. But, you know, for me, it was too volatile. I like something that I have more control over, you know, but I'm not knocking nobody that does it. People make money doing everything, you know?
Yeah. Chris, I really want to hop into, man, you was talking about that neighborhood in the Fifth Ward that you bought off the owner financing. First, with the owner financing deal, bro, like how, you know, a lot of people, they don't really think that it's possible whenever you talk about buying a whole block that you can really get the person to agree to sell you something without paying them all that cash. Like, how do you negotiate a deal like that?
Man, all right, so negotiations. You got to find people that have a pain point, right? And you gotta find people that are basically in a distressed situation. And number one, you got to find people that probably aren't the ones that worked hard to get whatever they got. Okay, so I talk about this recently on one of my posts, that owning a big portfolio of real estate does not automatically equate to generational wealth like a lot of people think, because what you see, just like anybody that's wealthy that has a business or anything, when you raise your kids with a silver spoon and you don't teach them the importance of money and how to use money, how to make money work for you, and they're just always giving and take, you're always giving and they're always taking, then when you hand over the money producer, the asset to them, they don't know what to do with it, right? And so every big portfolio of rental property I got right now, I bought it from the heir of a real estate investor that had a big portfolio. Every one. And so, and that's Baton Rouge, and that's two blocks in Houston, same, 3 different families, same situation. So it's congruent. You know, first thing is finding somebody like that, and then, you know, they've inherited it. They inherited it in a state usually where there's so much that needed in repair that they don't have the money to renovate it. So they're just trying to let it carry itself, and they're getting frustrated. You know, but that's what this guy was. And so it was at the point, it's like, look, you know, you got this money coming in every month from these rents. You don't have the money to fix it up. Let me take it over. I'm gonna give you a lump sum right now. I'm gonna give you. So I gave him $45,000, and then I'm gonna make monthly payments to you. So when I make these monthly payments, your revenue stream really ain't gonna change. You was getting rent, now you're getting a payment from me for the next 20 years. And so for him, he was like, okay, I'm 70 years old. What's the chances of me being 95 and you know still being around? He's like, okay, so I'm basically gonna have money for the rest of my life. Cool. Same difference. And he don't have to worry about the headache of property management, he don't have to worry about the headache of paying taxes, he don't have to worry about insurance, he don't have to worry about none of that no more, right? So for him, it's a win. Also, if I went to him and said, I'm gonna pay you $450 cash, he gonna get a big tax hit on that, you know? So a big portion of that $450 goes to Uncle Sam. So if you can sell them on those facts, it's like, look, you make more money in the long term because you make an interest on top of it, you know, and you get paid out over time and you don't miss any money, then it can be a win-win for everybody.
I like that. I like that you make it like a win-win situation for both parties. Like,
man, that's the number one thing I learned about negotiation and getting people to do creative things out the box. You got to number one, you got to show them what's in it for them before you tell it what's in it for you. You know, you have to.
And I like that, especially now because we're on the topic of real estate. You see that a lot with wholesalers. A lot of times, wholesalers, they don't really want to solve the problems anymore. A lot of people, they just trying to beat people out their money. Then they turn around and they trying to beat the buyer on the back end too. So I like how you mentioned, you know, you got to make sure you show what's in it for that other person in that negotiating, because I'm pretty sure they help you close a whole lot more deals too.
Oh, definitely, man. Definitely. I mean, whenever people feel like you're really solving a problem for them and you're helping them more so than going after it for yourself, they always buy in, you know, 100% of the time.
Now I kind of want to go more into the actual neighborhood that you purchased in, bro, because you mentioned they call it the bloody nickel. And when it comes to these low income type of crime areas, a lot of times we run from that, but you saw the value in that. Like, could you speak more to that?
So let's start from the beginning. At one point in time, this neighborhood was founded in like 1910, right? Mm-hmm. And this was before desegregation. So this was once a thriving Black neighborhood, right? This is one of the first neighborhoods settled in Houston. Matter of fact, it's the first neighborhood settled by Creoles from Lafayette, Acadiana area when they moved to Texas. It's actually called Frenchtown, the little blocks, the area that I bought. This area went from thriving, and then after desegregation, when we felt like we had the right to move to other people's neighborhoods, we a lot of us moved out of our own neighborhoods, right? Because we felt like we earned the right to go move in somebody else's neighborhood. And this Fifth Ward also was a thriving business district. Like we talk about Black Wall Street all the time, but every single city had to have a Black business district because we couldn't patronize nobody else's stuff. Mm-hmm. Like doctors, lawyers, insurance companies, restaurants, tailors, laundromats, everything. We had everything in our neighborhoods. And so now all these abandoned buildings, I guess we grew up seeing them abandoned, so we don't really ever think about what they once were.
Yeah.
Right? So what you see in the neighborhood now is the people that didn't make it out when everybody else left. But there's still a lot of opportunity there. And usually what happens is we look at the people that are still there and we do two things. Number one, we say, oh, it's too rough. It's too hood. I wouldn't want to live there. And number two, when somebody does try to go do something, the other group is like, nah, don't do nothing over there. Don't make it nice because you're going to make it unaffordable for the people that are there. Let's make it a charity neighborhood where we only look out for them. We only do low income stuff, and we beg the government to bring a grocery store back. And none of that never works. Like we've been trying that for 50 years and it hasn't worked. So the model is what we should be doing is let's go back to these neighborhoods that were once thriving. Let's take control of them and let's rebuild them. Let's build them back up. Right. And so for me, it was like, okay, I see this opportunity here because if you look at Houston, redevelopment, like 40 years ago, everything inside the 610, which is inside the loop of downtown or around downtown, was the hood. There was all wards all the way around. And so it started in the Heights and it moved counterclockwise around downtown. Everything's been gentrified and revitalized, right? So Fifth Ward was like the last quadrant that hadn't happened to. So for me, it was just like a calculated risk. I was like, I'm watching everything creep this way and eventually it's gonna get over here. So if I position myself in front of it while everybody else is still, discarding the neighborhood, I'm like, I'm gonna be in a position to win eventually. I didn't know how the win was gonna come. I didn't know what it was gonna be, but I just had the foresight to know that I needed to be in front of the wave, And so, yeah, so that's how I got into the neighborhood, man. And yeah, when I bought into it, like I said, the particular block that I had, it was an old abandoned grocery store. Lady was just selling food illegally, selling beer and wine on Sundays, Asian lady. Selling food stamps, all kinds of stuff. So I had to kick her out. And on the rest of the block, it was drug addicts, prostitutes. It was bad, bro. It was bad. Had at least 2 or 3 police calls a day. So I had to clean all that up. But, it was basically an investment. That was a sweat equity I had to put in to say, hey, I'm 29, I own a whole block. You know what I mean?
Yeah.
So that's how I got into it, man.
Man, they got some key takeaways I definitely want to dive into on that, man. Yeah. And I think one of the biggest ones was, like you said, you didn't chase the wave. Like a lot of people, they probably were watching it as it was happening, but you said, you know what, I'm watching it, clock. It's going to hit me at one point. And you did it in a district that was known for Black excellence. So that's going to even make it hit even harder. So now whenever, they're gentrifying all these hoods, you can't touch this one. Like, we update, but you can't touch this one.
Right. Yeah. And so that's kind of what happened. So I bought it in 2013. And in 2016, the biggest developer in Houston that built the big city center development announced that they had bought 150 acres in the south end of Fifth Ward, like right on Buffalo Bayou, right next to downtown. So that's when I was like, okay, the bet paid off, but they didn't say when their project was going to start, but I knew eventually something was going to come. So that kind of solidified everything. It's like, so you got 2 parts to it. You got to have the foresight to know where to buy, and then you have to have the understanding to know when to move. Like after you control it, don't move too soon because you may invest in something and rehab it, but there's still no demand or no interest for anybody to move back to the neighborhood. So you got to have both of those variables in that equation at the right point in time to make it a win.
I have a question. I thought you was about to say something. And so whenever you're doing that and doing your research, were you going to any type of like economic development meetings or anything like that, just so you can know, okay, I know that this is where they might be allocating some of the funds to, or anything like that?
Yeah, so definitely you want to stay plugged in with city council minutes from meetings, because anytime there's a big project, the developer usually has to go before the council to ask for what they call a variance for the change of use for a property. You want to look at the city's planning and urban development department online. That'll tell you like the 5 and 10 year plans for the area. And then you want to just read the newspaper, watch the news, because new developments are always announced way before they actually break ground. And other things you can do is, like, I was very plugged in with all the realtors that worked with builders and new construction people, because they are the ones that are also in the forefront, because they're really closely connected to the commercial developers. They know them, so whenever they know their friends that's a commercial developer is about to do something, they're going to go start building in that area. So when you have all those different sources of information, you can kind of piece it together and understand what's about to happen.
And so, like, with all that you just said, kind of, to me, I think it answered a little bit of what I had in my head. Seeing that you were doing, you're only selling to people who look like us. And I think that's a real important thing when it comes to developing our communities and redeveloping them. So, like, what were some of the things you used to kind of get people to go back to that neighborhood after, it had built such a bad reputation?
Yeah. So, so number one, technically you can't discriminate on who you sell to. So that's the other side of the Fair Housing Act, right? Like, you can't say, no, I'm only selling to Black people. But what I made sure I did when I decided to start the new construction was educate us on the importance of getting in early. Like, we always complain about gentrification. We always complain about how we never can afford anything in that neighborhood. But I had to educate everybody on the fact that the prices just don't start at this high. While we still call it the hood, the prices are here. While we still call it the hood, the prices are here. And by the time we go back to the neighborhood and realize it's changed, the prices are here. And then we're like, damn, we can't afford nothing, So, but what really happened is, while we were still calling it the hood, they were in there walking their dogs. You know what I mean? So you have to be okay with moving in before everything looks nice. If everything looks nice, you have missed the wave. You've missed that value appreciation wave. And so for me, that's all it was. It's just educating people on that, educating people on the importance of realizing that these neighborhoods once had a rich heritage, and it's important for us to move back if we ever want those narratives to change. If we really want the grocery stores to come back to these communities, some of us have to take the charge and actually be the ones to move back and buy the properties, because the grocery store is going to pull the demographics of the area. They're going to look at the average income of the area. And if all the corporate guys, the lawyers, the doctors, the dentists, if they all in the suburbs, when they pull the demographic in that neighborhood, it's not going to show anything. So we got to be there, and that it could be a win-win for everybody. So that's really what it was, man. I mean, my first two buyers, actually, they already had that mentality. Like we think nobody wants to move back, but it's people that really do want to live back in those neighborhoods. The first two people, they saw what I was doing and they put contracts in, and then they found out about my movement, and they were like, "Wow, you really on a bigger wave." Like that made them even more energized about being a part of it. You know what I mean? So I mean, it's a lot of opportunity for us to continue this and duplicate this and replicate it and just expand on it.
I love how everything in your strategy has it set up for everybody to be able to win. Like, the buyers of the houses are winning, like the investors are winning. Everybody is able to win from like beginning to end. And I love how you set it up to like give people an incentive to try to get back into those neighborhoods. Because what you're saying is the truth. Like, corporate gonna pull those numbers. They're gonna try to see the demographics. Like, this is what actually creates change. That's going out and doing something about these neighborhoods, not just leaving them how they are. And
right.
Talking about gentrification, talking about it ain't gonna bring no businesses and no stuff back in.
Yeah, that's right. And every one of my buyers, I know for a fact, I'm selling them for under $300,000 on purpose. I wanted the houses to be the same price that they are in the suburbs. I know each one of those houses is gonna be worth $400,000 in 4 or 5 years. So everybody that's buying is gonna have 100,000 equity. That's increasing their net worth. Everybody talking about the African American net worth gonna be at zero. Well, if we do things like this, it won't be. Everybody, will increase the net worth. Right. So that's the whole goal.
Man, and I kind of want to get into, like, whenever you were coming into this neighborhood, were you kind of met with any type of resistance from the people who are in there, like living there, and kind of like, okay, because you look like everybody look alike, but they probably like, man, what this dude doing, thinking he about to come in and change all of this and that. Was there any type of like resistance like that? And how did you kind of like educate those people if you did meet that resistance?
I really didn't, because I didn't come in and like change anything overnight, right? So imagine I bought the property in 2013, cleaned it up. I actually did parolee housing for like 3 years on it before I started any new construction. I didn't start demolition until 2000, late 2017.
Okay.
So, but the neighbors had watched me go in, clean it up, and like get rid of all the bad traffic. I mean, there's kids right now that are next door. They're like 8 or 9. When I bought the property, their parents wouldn't let those kids go outside.
Yeah.
You know what I mean? Because of the crackheads and the drug addicts and everything. And now the kids playing outside. You know, so all the neighbors are happy for what I did. The junkies are probably the only ones that's upset, but I mean, they just moved to another area, you know? I really didn't meet that. I really didn't have that. And I think once I started new construction, people got nervous, but once they started seeing who the buyers were and who was moving in, they were actually impressed. Like I remember like after when I was building the first 3 and the first 2 were sold, and I was doing something over there, waiting on the third one to sell. And there's 2 kids, there's like 14, 2 guys, black kids. And they walked up to me, they're like, man, you building these? How much they rent for? And I'm like, oh, these not for rent, they for sale. And it's like, oh man, who be buying these? Must be white people. I was like, actually, brother, I was like, there's actually people that look just like you that are about 10 years older than you that actually the buyers of these. And it's like, man, for real? Like, we didn't know like we could do that kind of stuff. And so like, that's the type of imagery that they need, you know what I mean? Because they don't have that nowhere over in those neighborhoods. And so when we move back, it's unfortunate that kids that like friends that grew up together, right? Like y'all got friends that didn't go to college, that dropped out of high school, right?
Yeah.
So, but imagine after you do what you do and you decide to go to college and you go to work, work every day, and you got student loan debt, and you want to move back to the neighborhood, your buddy's still back there. But when you get ready to move back, it's like, nah, we ain't got no options for you, bro. You got to go to the suburbs, instead of having an option for you. So there's people that want to move back and want to be good examples to the next generation and say, look, I made it and I'm still here, or come from another neighborhood. Look, I grew up in a neighborhood just like this, but now I'm here. So I haven't had any pushback, because like my focus has specifically been not displacement. Like I'm not knocking on nobody's doors, asking nobody's grandma to sell their house. I'm not doing none of that. It's only abandoned property, drug infested property, neglected property. That's the only things I'm taking to build new construction on. Anything else I buy over there, if it's got tenants, I'm trying to keep them there. Like I don't want to displace anybody.
Hey, that's hard, man. I love to hear it. And that kind of goes to the next segue I wanted to go in, because you talked about it earlier, about how whenever you're coming through, a lot of the times we speeding up the gentrification. Mm-hmm. So can you kind of explain, like, how is that we're helping them in the long run whenever we're doing some of these things?
Yeah, okay. So, and this mainly comes with wholesaling and flipping. What we don't realize that, so it's sold to us that this is how you make money without having a lot of money to invest, right? Mm-hmm. And what you're doing is you're getting real estate from a distressed seller, and then you're marking it up and selling it to an investor. Well, most of the time, the investors don't look like us, right? And a lot of times, the people that you're negotiating with and selling to, they feel happy. A lot of them didn't want to sell to anybody else except somebody look like them. Another part of history that we don't talk about, we talk about redlining, right? When the government started backing loans for certain neighborhoods and they excluded the black neighborhoods for the most part. Well, we forget about the part that we already own houses. Like our grandparents and great grandparents worked and built houses out of pocket. And so a lot of these houses that was built in the 20s and 30s and 40s that are still in these neighborhoods that we're inheriting, you know what I mean? Our great grandparents and grandparents built those out of pocket, and we letting those go now, right? And then so like our generation, the ones that have those now, or the previous generation that are in their 60s and 70s that have them now, a lot of the wholesale deals come from people like that. And they've held on to it specifically because they don't want their family legacy to be given away to another culture. Mm-hmm. And you go in as a wholesaler and they really think you're buying the property, or you go in as an investor and they really think you're about to keep the property. And all you're about to do is renovate it and flip it and sell it to the highest bidder, whoever that is. And a lot of times they don't look like us, So you're basically turning the neighborhood over for a quick profit. I'm very purposeful, and I'm trying to tell people to be cognizant of that. Like, it's okay to do that and make money, but try to keep it within the community. Like, a wholesaler, find an investor from the from the community, a black investor or somebody that has the genuine interest of the community at heart, and somebody that's networking with either agents that can bring people from the community that are looking to buy a house so that it stays in the community, or people that want to rent that look like us that want to live in the neighborhood. You know, it's ways that we can do it and still make money, but not just turn the neighborhood over to outside communities, basically. Yeah.
Gotta practice that group economics, man.
That's what it is. 100% group economics.
That's the thing.
100%.
And I really want to pivot now to the second thing, because you doing group economics on a major scale, my brother. Like, we didn't even get to talk about it yet, but I'm excited about it, because like, you just with your fund, didn't y'all exceed y'all goal and like it's close?
Yeah. So so the maximum that a fund can raise is $1,070,000, and we hit that number on July 9th. So. Yeah, after 6 months.
Congratulations, man. I was just about to say, y'all just dropped away.
Yeah, the beginning of the year?
It's like, it took about 7 months. I started in like December. December. And that whole project was, so we just talked about all the new construction, right? Mm-hmm. And I hinted on this topic a little bit, but it's about protecting the existing residents. So as you go in and revitalize, or when you see a neighborhood about to be gentrified, the only way you can control rents, the only way you can have any control over displacement is to actually own the other real estate, right? And so when you know the gentrification is coming, you can go in and invest and put yourself in a position to benefit from the value appreciation of everything. So that gives you a good ROI. And that way you don't have to focus so much on the cash flow, which means you don't have to go in and raise rents and displace people, you know? And so that was the focus of that project. It was, let's go in, I another tired landlord. This one, the parents actually still owned it, but the son didn't want to take over it. He just wanted, you know, because he's got a corporate job, he's got a different mindset on what he wants to do with his life. So nothing wrong with that. He's got to start another business. So the family had put the entire portfolio up for sale, 18 houses, 2 commercial buildings, right on the Black Wall Street of Fifth Ward called Lyons Avenue. And so when I saw the opportunity, I was like, man, this is a good one to take control of. Yeah. Because some of the tenants have been there 30 years, literally. Matter of fact, the Houston newspaper, the Houston Chronicle, wrote an article that came out today about this project. And they got interviews from a lady that's 72 that's lived there half her life. You know, there's 2 sisters that have been there, living there 20 years next door to each other. And one of them's daughter live on the property too, in a different house. So to say you got this type of long-term tenants, and when the owners say we're going to sell, all of these people get nervous, right? Because their rent is like $550 to $700. They know they can't go nowhere else and find rent like that, you know? And so for me, 18 houses, between $500 and $700 a month in rent, that's still bringing in $11,000 some dollars a month.
Yeah.
You know what I mean? So I'm like, okay, if I can do the same like I did with the other one and negotiate an owner finance situation where I don't have to use a bank, I can make this work, right? And so I went to the sellers and I was like, I'll offer you 10% down. And they were like, nah, we need something more than that, because, you know, we ready to retire. We need some significant money. So we ended up settling on 50%. They were asking $1.5 million for the whole portfolio, all 18 houses and the 2 commercial buildings. I talked them down $250,000 basically. So we settled at 1.25, but I talked them in 50% at closing, and then 50% in 2 years. No payments in the middle. So yeah. So, and the way I was able to negotiate that is because they hadn't had any accounting records, right? So they were just collecting payments every month, like Xerox copies of money orders and stuff. And so I explained to them that if I want to be able to get a bank loan on this eventually, but I'm gonna need 2 years of strong financials to submit to the bank. So I said, so if you work with me, let me give you half of what we agreed on now. Give me 2 years to get everything up and running, get the commercial space back online, and get that revenue generated. Then when I go to the bank, I'm only asking them for $650,000. They're gonna give me that all day, you know, because it appraised for 1.35 right now, right? So by then it's gonna appraise for at least 2.5 or something like that, because it's gonna have so much more revenue coming from the commercial side. So when they agreed to that, I was like, okay, this is an opportunity for me to like do something else I wanted to do, because we always mad at Oprah, LeBron. We're like, man, why not buying the hood? You know, we mad at Jay-Z because he didn't buy the Marcy projects, you know. But let's think about it. We got trillions of dollars going through our community every year. So if we could collectively invest our money, we can control a lot of this narrative that we waiting on the wealthy ones to handle for us, right?
Yeah.
So that's what made me make the decision to say, hey, I had private investors. I had somebody that could have funded it, gave me the money for like a 10, 15% return. And I could have kept the project to myself, but I was like, nah, this is more something I want to create a blueprint for what we can do in our communities. And so that's how the whole crowdfund came about, man. Everything I'm talking about happened. The negotiations happened in November, and by the end of November or December, I was running with the crowdfund. I even told the sellers what I was planning to do, because they were older Black couple, and they were like, "Wow, we'll give you time to make that work. We really want to see you successful with that." So it's all about communication, man. It's all about communication and delivering the right message. And so, yeah, what it's done is it's really been working. It really worked,
Yeah.
Closed on it in March. I actually closed on it before the crowdfund finished, just to make sure the sellers didn't get antsy, So I closed on it, and I had only raised like $230,000 at that point in time with the crowdfund, which is still pretty good. And I just, bridged the rest of it with private investor capital, some of my own money. Yeah, and so I think some people were apprehensive. They were like, "We've never seen this happen before."
Yeah.
So what if we give you the money and you don't close on it? And so those types of things happen. Like, what are you going to do with it once you close? So I think some of them were just wanting to watch and wait. So that's why I went ahead and closed. They started renovations immediately, so people could see this is real and this is really what's possible. And after that, people continue to invest. And I think just it's like almost like a perfect storm with everything that's going on with the social climate. The right before the George Floyd thing, I think the raise was at about 700,000. And man, in like the last few months, it raised another 300,000 or 350,000. So people really, I think that really showed us the importance of why we need to control our own neighborhoods, because if we control these neighborhoods, we have more control over how they're policed, everything. So it makes sense for us to say we own these areas, and yeah, man, I'm hopefully, I know this is going to be a start to bigger projects that do the same type of thing.
Yes, sir. And I know you mentioned it, that you wanted to be like the blueprint. So could you like dive into exactly like how people can go about starting these types of funds and like how you structured it a bit?
Yeah. Okay. So before Barack Obama was in office, it was impossible for a bunch of people that were not millionaires or make over $250,000 a year for the past 2 years to be able to collectively invest in $1 million projects. It's called syndication for the big deals. And that's how a lot of times when you see malls or shopping centers or big apartment complexes, it's not really one owner. It's either like a big company, like an insurance company that's bought it, or it's a syndication. It's a group of people that invested money together, but they're all, like I said, that's categorized as an accredited investor. You worth $1 million, or you made $250 for the past 2 years in a row. Well, Barack Obama implemented something in the Jobs Act that said anybody can invest collectively now, up to $10,000. So the legislation is there. So this is like, it's SEC regulated. So you have to do it through a third-party platform. So imagine this being like a GoFundMe, but for investing instead of donations, right? So there's a bunch of those platforms out there, and you just look up Regulation CF crowdfund, and you'll see different platforms that allow you to raise capital for these types of projects. But it's a few things that they got to have for them to be successful. Number one, they got to have cash flow. That's the most important thing. A lot of people want to raise money for things, and then what happens is you have a lot of newbie investors, really, like people that haven't had the opportunity to invest before. You can keep the investment amount low, like $250, $500. I kept mine at $250, so I gave everybody an opportunity to be a part. But a lot of those people don't really understand investing, right? Mm-hmm. So if you take their money and you got something that it's going to take 2 or 3 years for them to start seeing a return, that's not good.
Yeah, not them.
They already have higher than average expectations of I'm about to get rich off of this, and you already have to taper that expectation in reality. So it has to be something that already generating revenue, so that when they invest, you can start giving them a return immediately or within 6 months of closing. So that's what I'm doing with this one. Number one, it also has to have upside potential. So you can't really crowdfund something in a neighborhood that doesn't have any catalyst for value appreciation. So it has to be some type of activity. Like, you can't go do this in a war zone. You don't want to do it somewhere where it just seems like a good idea and you want to be the spark. That's just too risky to take other people's money. So it's got to be somewhere where there's some type of redevelopment already happening. It's got to be something where some part of it already has revenue coming in, and you have to find sellers that'll work with you on flexible terms. You don't want to have a bank tied into the deal unless you really, really have to, because it can get nasty. You don't want something to happen where the payments can't be made, and then the bank tries to foreclose, which means all your investors are gonna lose their money. You know what I mean? So I think those three things are really important pieces. So if you can figure out things that fit that equation, then those are definitely good things, good areas to crowdfund. And a lot of cities have that going on. I mean, there's gentrification happening everywhere. So if all you want to do is get close to the gentrification, you don't have to be right in the center of it, but right on the outskirts of it, where the property values are still affordable, where there's still a lot of upside potential, and you can duplicate the same model.
Hey, there you have it. My brother just gave out the actual blueprint of what he did. I love it, bro, because like, you know, a lot of times whenever people do things like what you're doing in the name of group economics, they still be stingy with that information, that knowledge when it comes to it. So it's great that you share it, because really that's what you're doing right now. Like, if we can get people to start doing this and investing in this on a mass scale, we can start seeing a lot more changes. Like you said, like, yeah, it's not going to happen overnight. Right. It took you, what it was, 2013 to 2017 to really get your right. development off the ground. But that's the mindset we got to come into it with. Like you said, the people who the new investors that ain't never invested before, they want to get rich off $250. That's not like the way we got to approach this. Is we get more people in on it and understand it, we can really start seeing those changes, like, and actually benefiting from it.
Precisely. That's it.
I like the fact that you kept it at $250 to keep it at like an affordable level for a lot of people to be able to get in. Yeah. And I think that was really cool too. With like, you know, I know some of the listeners may not be familiar with exactly how you would set up the crowdfund, but like you could put the $250 in and you could get like, wasn't it 5 shares?
Yeah. And so the way that part works is, so I took basically the value of the property in about 2 years when it's done. And I said, I'm gonna sell 40% of that in shares, just like you do a company, right? So I broke it up into $50 increments, and I said the minimum buy-in is 5. You got to buy at least 5, so that's $250. And in exchange for that, you get I'm taking 40% of the net profit from the whole project. So you take all the rent revenue every year. After you pay all the bills, what's left, 40% of that gets divided up, and each share gets the equal percentage of that. So however many shares you get, that's how much your dividend payouts are basically. And then also, since you own, so this is something a little bit more technical, but when you buy shares or when you do a crowdfund, you can do it 2 ways. You can raise debt, which means people are loaning you money, or you can raise equity, which means they are actually buying ownership. And so what I did was I did equity because I want everybody to have ownership in it. I didn't want to just say, I'm gonna pay y'all 10% return on your money, and once I pay y'all back, you know, you're out. I want to make sure everybody has the opportunity to own a piece of this long term. What that means also is, since they own shares, as the property value goes up, the value of their shares goes up, right? So as gentrification continues to happen, this property is worth 1.3 when we bought it. It'll be worth 5 million in 10 years, easy. So everybody's share value, if you hold on to that long, that's how much your value is going to increase, you know? So it's just a model that works for everybody. So yeah, so people have the opportunity to invest a very small percentage and actually experience how that works.
My brother got that go-giver spirit written all over him, man. That's hard, bro. Yeah. Just like everybody really just winning, like. Yeah. I'm sorry for the people who couldn't invest now, man.
Yeah, I mean, a lot of people still hitting me up wanting to get in now, but you know, that wave has passed. But it's gonna be more projects. I'm gonna do one in Baton Rouge. I own a bunch of property by Southern, so I'm gonna do the same thing. That's a different type of catalyst. So it's not really gentrification, but it's a pent up demand around like HBCUs, especially. You know what I mean? To be redeveloped around there. There's not enough housing on campus most of the time. So this is an opportunity to kind of create a similar model, but it's focused on what we can do around our schools.
Redeveloping these HBCUs too, man. Yeah, I'm excited, bro. This is it. The next 10 years is gonna look beautiful. That's all I can keep thinking.
Yeah, bro.
I know you got another show, so we're gonna just segue to our last section called "What's on Your Timeline." So we're just gonna. Is this anything that you saw on your TL? It could be something inspirational, something funny you probably saw. Just anything that you just was like, you know what, I kind of want to talk about that.
Man, okay, well, it ain't funny. It ain't funny, but I saw Donald Trump tweet today.
Oh man,
Tell everybody in the suburbs that they don't have to worry about low income housing and being around their neighborhoods anymore. Part of the issue is we as a community now, as a culture, we don't own a lot of businesses that can employ a lot of our people, right?
Mm-hmm.
But that goes back to what we talked about earlier. Before desegregation, we owned businesses and we all worked for these businesses. You know what I mean? Like, do you think during segregation they needed affirmative action?
Nope.
Because we hired our own people, right?
Boycott shit. That's why they could boycott shit.
Exactly.
Facts.
Yeah.
Yes.
So I mean, like, I think that's a call to action for us. It's like, okay, we got to get back on this wave. We got to start owning more. We got to. It's cool, and I don't like people that say everybody should be an entrepreneur because it's not cut out. Everybody's not cut out to be an entrepreneur. We need some of them good corporate people that like those jobs, that like being told what to do and like to perform and get metrics and get a raise. We need a lot of those working for our companies to help us build bigger companies so that we can employ more people, and then we can hire our own and move more people out of the low income tax bracket. So we don't have to feel like it's a punch in our gut every time he says something about low income housing, because technically in reality, there's more white people on Section 8 and more white people on food stamps than us. But we feel like it's a personal attack every time. And part of that is because we don't control our economics in our community.
Man, I'm so happy you like walk people through that historical example. I know you see me over here going crazy because that's that stuff I really be like. I'm not gonna lie to you. I watched the episode of Killer Mike, and then I had just different stuff that I was intaking at the given time had got me to realize, like, dang, bro, like I was one of those people that hadn't thought about it, like the walk through history. Like, we really in desegregation, like we own our own stuff. Like, we had whole parts of town that we lived in, and that's where we had to buy your food. That's where you had to go to the restroom. That's where you had to get water. That's where you had to do everything because it was the only place you was allowed. So we had our own ice cream parlors, our own movie theaters, our own everything. And like, people don't think about how like none of that is here anymore. Like, it all just,
and what's funny is like a lot of cities, the buildings are still there.
Yeah.
Like all we talk about is Black Wall Street. We talk about the one that got bombed and burned. But you go to Bronzeville in Chicago, everybody else around, the seniors talk about, they say this was just like Black Wall Street. You know what I mean? Like I said, Lyons Avenue, I got pictures of Lyons Avenue thriving, like cars all up and down the street, people out, dressed nice, you know what I mean? It's just like, man, we don't talk about none of that. I always talk about the one that got bombed. Why we do that?
And I think, like, because I even think about it, I feel like a lot of that reason is because we get scared because, like, oh, if we do it again, this is what's going to happen again. And I feel like that's kind of maybe like a tactic. That's probably why that one is spoken about the most, because maybe they're like, you know what, we don't want y'all to have this shit again. So
they don't want us to be exposed to what was real, so they don't correct that narrative. They let us think that was it.
Right, because if we correct that narrative, then we can do exactly what you said, which is like, I really want people to key in on that. Like, you can then create the jobs and control the situation for your people. If the minimum wage in your area don't pay enough, you open a factory that do pay enough, then goddamn it, you fix the problem. Now people can live a little bit better.
Think about this. Like, we talk about a big part of our issue is the slave mentality and slavery, and how that's held us back. Think about this. These businesses that we're talking about now is in every city. These people's parents were literally slaves, or some of them were literally slaves. So how can we blame that on the reason why we can't get ahead now, when the people that were actually slaves started more banks, started more businesses, hired more people than we doing now? I mean, I understand that's a part of it, but we can't hang our hat on that and say that's why we can't get ahead. We can't. We got to take responsibility. We got to move forward.
That taking responsibility part, I think that's one of the biggest things, one of the biggest messages with the Black Wealth Renaissance. Like, we can't sit here and like, we can sit here and just like blame everybody, everything but ourselves. We need to take that look inside, look at how you spending your money, look at the decisions you're making, and seeing how you creating your life and creating the changes that you want to see. Because until you do that, you just talking basically.
Yeah, no, I agree. And don't get it twisted. We still need the people that are fighting for the equal rights, for the injustices. We still need that group. But we need more of us focused on the other stuff, because everybody's focused on that one component when there's so many other aspects of it that we need to be working on at the same time.
Because then we ain't got to worry about now, somebody happy because a company decided to change their racist logo, or because, you know, somebody decided to paint some streets or something like that. Like, then we can actually like create the change that we want to see through the businesses and the control and the network that we have. Like, I included that in a blog that I wrote for BWR. Like, the boycott with the buses was able to happen because they had a Black-owned taxi system that was able to run and keep the people going to work. The people wasn't gonna be able to not just go to work. Right. That's another thing people don't talk about. People not just not gonna shop. They still gonna go to Route 21, still gonna buy all this stuff. We are the people who have to create the substitutes and the things that our own folks can go to keep the money within the community. 100%. People not gonna inconvenience themselves for a revolution.
Right. You're right, man. You're right.
And it's crazy sometimes whenever you even talk about the substitutes, how whenever people do start creating those substitutes, people start to criticize them. Like Master P with his brand, like he came with the rice, with the pancake mix, with all of this, because he knows that that's where most of the Black people spend their money at. Yep. Whenever they're shopping, that's one of the largest demographics that people spend their money at. Master P is not an idiot. He does his research.
Never ending, man. Nobody's ever happy, but nobody's taking action either. So, you know.
Hey, man, that's the biggest part too. Nobody taking action. You got all the criticism, but you cannot take action.
Well, Chris, my brother, we appreciate you hopping on the show, bro. Could you please plug yourself in, let the people know how they can follow you, keep up with you, any projects you got going on?
You offer mentorship and stuff too, like that too, right?
Yeah, man, I got that. So my platform for mentorship and like learn at your own pace is called learnfromchris.com. Just go to learnfromchris.com. It's got several different ways that you can get in. Like if you just get started, or if you want to get in a small group mentorship program, that's on there. Just my Instagram page, man. That's my main social media platform. If you want to send me a direct message, you can send me one there, or you can email me at chris@learnfromchris.com. And yeah, man, I'm open book. You know, I'm always giving away game. I will be announcing when the next project's coming online. So yeah, anybody want to get tapped in, you know, that's how they can find me.
Hey, y'all definitely check in with my brother, man.
Y'all
see the vibes he got. I know if y'all tapping into that mentorship, I know the game crazy.
And the man already explained to you how he winning, how everybody winning in the situation. Why wouldn't you want to win?
I know it's crazy.
Yeah.
Why wouldn't you want to win?
Let's all win, man.
Well, before we wrap this one up, y'all, we're going to hop into a few housekeeping notes. First and foremost, as always, thank y'all for tuning into the Black Wealth Renaissance podcast. Growth's always crazy. Continue to like, share, and subscribe. Y'all make sure to check out our book, Manage Your Money Like the 1%. That's
available
been doing really well.
Ebook and paperback. So you can buy it from your favorite retailer, wherever you want to go to. Amazon, Walmart, Target, Books A Million, Barnes & Noble. We global, baby. So y'all definitely check that out. And also, 8 Weeks of Wealth. Y'all join the 8 Weeks of Wealth. We're doing 8 consecutive weeks, just educating people on different topics. Last night, we did our house hacking course with Brian last night. It was really, really good. So y'all definitely be on the lookout and try to join. You'll get lifetime access to all of these webinars.
Brother Spiller, you got anything?
Man, just, you know, y'all check out that 8 weeks, man. That's gonna be crazy. We spend a lot of game, everybody getting a lot of information. And also just on a little bit more of a personal tip, a little announcement, man. By the time this podcast episode done dropped, I'm gonna be, you know what I'm saying, got my license and everything together. So if you're in Louisiana and you need some life insurance, y'all hit up your boy.
Hey, turn up, man. I thought you was gonna tell her about the mobile home, man.
Hey, I did get a mobile home. I forgot to tell y'all about that. I did buy a mobile home. We gonna get some BWR content on it though. I got y'all.
Hey, that's what's up, bro. Congrats.
Appreciate you. I'm trying to get like Chris out here. You know what I'm saying? Start small.
And with that being said, this is Black Wealth Renaissance signing out.
Peace.